Hey, Mounir, I'm so excited to have you today. Can't wait to discuss all the algo trading with you and how you got into it. So, with that being said, how did you get into this crazy trading game?
Yeah, so primarily when I was quite young, I was always interested in finance and kind of markets. Originally, I started with dividend investing, which didn't make me much money. And then, kind of from there, I got into the classic trading kind of roots of trading discretionary. So, a lot of the beginning, it was large caps, Tesla, Apple, using kind of resistance lines, things like that. And then I've been trading for about 4 years and a half now and got into more algo trading for the past two and a half, give or take. And that was mainly to diversify my trading from not just being discretionary trading and using kind of manual execution, and then taking advantages of futures where you can be very algorithmic and it can be really kind of profitable.
And I know you said when you were younger. If you don't mind sharing, how old are you? Because I'm pretty sure you're getting a much head start on me, right?
Currently, I'm 22, and yeah, I guess it's starting off quite young.
It's fantastic. And you started coding when you were 12.
Yeah, so primarily I started coding for Minecraft servers. Just kind of developed my own kind of stuff. That was around 10, 12. And then more getting focused into Python, a bit more focused when I was doing some statistics in my kind of degree. And then trading wise, really, I just focused for the past like 3 years, mainly on trading kind of code.
And then I guess the question is, why did you get into, obviously you have the tech background, which is, I love tech. And, I started trading discretionary, but I actually missed the programming and all that stuff. But why did you get into trading algorithmically?
Yeah, so I kind of touched on it just a bit before. I was saying mainly to diversify. So primarily, my main market where I started, or at least started to see consistency, was small caps. And small caps is great. You have huge volatility. There's a very obvious edge statistically, so it's really easy on data analysis kind of side of things. A lot of the time, you're kind of just filtering to kind of improve that edge or reduce your risk. But the other side of small caps is there's halts, there's T12 halts. For people that don't know, that's kind of just a news halt. So you could get stuck in that for a day, like a month, for a year. And sometimes during that time, you can even blow up just by having to pay for locates, which is a whole other side of small caps where if you're going short, you're going to need to pay for locates. And depending on brokers, those can be very expensive. So there's a lot of inefficiencies you can exploit, but there's also like a lot of risk to it as well. So the main reason I started getting into futures was primarily, first off, was the leverage is pretty much insane. So you don't need that much capital to start kind of toying around with futures. Like even with a brokerage side of things, you can get into Ninja Trader. I think like the minimum deposit is like 500 or like a grand. So that's kind of how it mainly started. And then from there, I started to trade it a bit discretionary to get some ideas. And then kind of from there, get into the algo side of things where I wanted the futures to be fully kind of hands off. I'll check it in the morning, I'll check it in the evening, make sure there's no like bugs, have alerts, things like that. But then focus on small caps and kind of diversify my portfolio to an extent where I'm technically trading two markets at the same time.
You mentioned Ninja Trader. So did you roll your own platform? Are you trading with Ninja Trader right now? I'm curious on that because I ended up creating my own trading platform, and I think at least it, it might have been a mistake. I'm just curious on the direction you went for trading execution, things like that.
Hats off to you for creating your own. I looked into it and it was very daunting, so I was like, nope, I think I'm just gonna stick with simple here. And I just kind of went with Ninja Trader. There's a lot of good pros with Ninja Trader. To name a few, the backtesting optimization, walk forward testing, all of those are pretty good. There are some nuances here and there that I don't particularly like with Ninja Trader. Like some of their calculations for performance metrics are not very good. So you kind of have to export some of that trade data and do your own calculations. But apart from that, at least on the execution side of things, they're pretty much perfect. I've never really had an issue with them, and they're very easy to deploy on like VPSs or things like that, compared to moving over your kind of whole platform or something like that.
Sure, sure. And can you do like multiple time frame analysis and things like that on Ninja Trader and those types of platforms?
Yeah, you can do a decent amount. The only thing you can't do is you can't do optimizations of multiple timeframes all at once with those strategies. I think another thing that most people wouldn't like is you can't do portfolio optimization or like portfolio analysis in NinjaTrader, at least not my knowledge. So a lot of times I have to export all the trade data into Excel or and then like kind of use Python or Excel to kind of do that analysis. So it's definitely it to some extent it's rudimentary, but I've never found it to be hindrance to at least getting some profitable strategies. And at the moment, I only run around 4 to 5, give or take. So maybe once I'm getting to the 30s and 40s, then I'll probably try and move off it. I've even seen for some people like Jacob Armelli, I think is how you say his second name. He's done very well with Ninja Trader, and he runs apparently around 30 strategies.
And for those of you that are curious, I would actually recommend going that route and not I ran into a lot of challenges rolling my own, and now I'm going through another iteration. So yeah, unless you really really love coding, don't roll your own. Just just so you know. Okay, perfect. At least that's my opinion.
Yeah, it's a big challenge.
Yeah, it definitely was. There's just so many things that you don't think of that, like, yeah, it was a challenge, and it still is. But anyways, can you describe any of those four trading strategies? Obviously, if you don't want to, you don't have to get into any of the specific details. But just curious how you're currently set up.
Yeah, sure. So I'll go over kind of like a couple of the main ones. So the first of a main one that I saw good kind of consistency and success with was a trendline strategy. Main reason for it was when I was kind of getting into futures. For a time I just traded it discretionary. For like 3 to 4 months, just on like prop accounts and just on sim. Just to kind of help idea flow, just to see what stuck out to me, what I think could work. And one of the first things I kind of saw myself start using was mainly trend lines. So I started to kind of try and backtest them. That was a whole ordeal in itself. Trying to quantify trend lines isn't as easy as you think it may be. So I kind of went into that route, and then that strategy has proven very profitable over the time. Pretty much what it is I'm just using trend lines and then the slope of that trend line to assess whether it's a short or long trade with some kind of sentiment filters as well based on like higher time frames. And then I'm just using ATRs really for exits and profits. So quite simple in its kind of usability. I think the only complex part of it is the trend line calculation. The next was a machine learning scalping strategy. So that's on Renko bars. It's custom Renko bars. If you go with the original, your backtests are all going to be flawed. So make sure to have some kind of custom ones that have the wicks and everything. And that one, to be honest, it's just doing mean reversion around a fair price, and it's really just kind of calculating a fair price using time and a couple other kind of filters. That one's definitely a bit more complex. I've had issues with potentially thinking it's being like overfit, especially because the whole machine learning side of things. Still been profitable, but it's taken a lot of tweaking and a lot of kind of testing and being worried that I'm overfitting. So that one probably taught me a good amount. And then another one I'll mention is a very easy one that I think so many people overlook is just MAs. So it's just an MA slope strategy. It's got a couple other filters here and there to kind of just help with sentiment. But realistically, it is just a slope indicator and an MA indicator, and it just helps with doing a kind of trend strategy along those lines.
Okay, no, that's fantastic. And how did you come up with those ideas? I guess I'll just be completely honest. Most of the stuff that I've come up with has been stolen, right? I find traders who I really enjoy and obviously learn from them. I've got about one alpha that I came up with by myself, but I'm just curious on your thoughts there.
I think if you hear someone say that they're truly an algorithmic trader, I would say pretty much the same. Um, I don't think any of those are really original. I've taken parts pretty much from everyone. Normally, my kind of resources to go to is either podcasts like yourself or other people's podcasts. Really, Twitter. I think Twitter is an amazing resource, so I go through Twitter a lot. And then lastly, kind of books. Books have been kind of a hidden gem for me. I never really used to read them that intensively, but at the moment, I try and at least go through a book once in a while because you can find some really good hidden kind of old strategies in there. Most of the time, I will say, at least in old books, they won't work straight off. You'll have to kind of understand the idea that they're trying to go for and then apply it onto kind of recent markets, just because volatility and things like that have changed so much since some of these books have been kind of released. Some of them still work, but that's kind of my main way of doing it.
Do you have any favorites by any chance? Any favorite books?
Yeah, sure. I think I did a tweet on this recently, and it's definitely still my favorite book. Is Evidence-Based Technical Analysis by David Awson, I think is how you say his second name. Another one I love is Trade Like a Hedge Fund. That one's really good. Main reason I like that one is some of the strategies are quite good. That's where I started testing a pairs trading strategy, unilateral, sorry, pairs trading strategy. Kind of basically stole the code from that book and applied a couple different things to it. I don't have it currently running at the moment. I did run it for a decent amount of time. It did okay. I think the main issue I had with that was having conviction in it because, at least for pairs trading strategies, they're quite hard to backtest historically when you're trying to do like NQ and ES or something like that on NinjaTrader. So I kind of stayed away from it just because I couldn't test it properly. I did a lot of forward testing of it, which it's good, but I'm not a huge fan of only doing forward testing. So I ran it for a bit and then just kind of left it. What's another good book? I think Robert Caravere's 30 Future Strategies book is quite good. Some of the points he makes I don't fully agree with, but a lot of the strategies can be quite useful to kind of take ideas from and apply.
And you mentioned forward testing. So, I've got a fair amount of discretionary traders and algorithmic traders there. Can you sort of just kind of back up a little bit and talk about your back testing process and maybe what a good strategy, what a good testing pipeline looks like, at least from your perspective?
Yeah, sure. So I'll say like first off that none of this is original. I've pretty much taken this from a lot of the goats, as you'd say, in quantitative trading, Ernest Chan, a lot of those other people. But primarily starts with idea generation, as we kind of touched on. I think that's one of the most crucial parts, to be honest. I think a lot of the time you should probably be spending most of your time in idea generation and then quickly testing and seeing what works. I think that's normally the way to go. The kind of mistake I made before was spending way too much time doing not just doing iterating on backtesting. Most of the time, if you find a good strategy, you'll sort of know instantly. If you do a ton of iterating, then you're just going down a slippery slope. But at least for the pipeline, yeah. So it starts with idea generation. Then I just go straight into quantification and testing. So normally that's if the idea isn't clearly laid out, I'll have to apply some assumptions of how they're calculating it. Then go into backtesting either with Python or NinjaTrader. If it's through NinjaTrader, then I'm coding in C Sharp, and if it's for equities, then I'm using Python, like Polygon data. There's a couple of other APIs you can use, but at least for me, Polygon's been a great resource. Then after that, I'll go into robustness testing. So that's Monte Carlos, parameter sensitivity testing, out of sample testing. Those are normally the main three I kind of hit. I have templates I just kind of use in my own Python code to calculate those. And then I do forward testing. If everything looks good after there, then I'll forward test it in a sim account or a very small live account for depends on the strategy and the amount of frequency I can get through it, but realistically, I'll probably test it for about a month, 2 months. If it's a super high frequency strategy, then I'll maybe only test it for a week or two. But most of the time, most strategies I'm kind of using are doing about one trade a day, maybe two trades a day. And then I'll take it fully live if everything's looking good after there.
Perfect. No, that's very helpful. And just so the audience understands, can you explain, Monte Carlo and forward testing?
Yeah, sure. So Monte Carlo, there's kind of two main methods of it. You've got distribution, redistribution, sorry. So let's say you have 200 trades in your backtest. It's then picking those trades at random and putting them in a random order. And then you've got kind of resampling, which is where it'll take any of those 200 trades and it could even duplicate them. So, it could pick your top five worst losses, if for example, and see how your strategy would prevail. And then it runs that simulation, whatever amount you want it to. So normally I do about 300 to like 1,000 and then it plots the equity curve, and you can just kind of see the general statistics of all of those equity curves. The kind of main things you want from a Monte Carlo to look at is first, obviously, the average performance is over 1,000 of those simulations. Is it still profitable? Is it still trending upwards? And another one that's really good is just for the risk analysis side of things. So seeing what was the max drawdown on the worst outcome. There's some rules of thumbs you can do. So most of the time, I'm taking that one, and that's how I'm basing my equity that I need to deploy to that strategy or the amount of risk management. Other people times it by two to be extra safe. You can really kind of go whatever way you want there, but it's a good thing you should at least look at. And then for forward testing, it's pretty simple. You're just kind of turning it into an algo, and you're running it on a sim account and kind of like just testing it over live data, and you're kind of comparing the performance to your backtest performance. Um, Different ways to do this. If it's a super like market cycle kind of strategy, it depends on the market cycle, then you'll probably want to compare it to when it was in a similar market cycle. If it isn't, then you can just compare it to the last kind of month of performance in your backtest, and see how it's kind of faring up using performance metrics, the equity curve. Those are normally the ways I'm kind of testing it.
And for those of you that aren't algorithmic, I mean, these are still things that you could potentially be doing, or paying someone else to do for you, right? To give you confidence, and you help discretionary traders understand their strategies.
Yeah, so primarily I run a small kind of business called Unbiased Trading. Primarily, it's just a coding service for traders. One thing I've got a lot of questions from people in my DMs or just people messaging me overall is, hey, I need this coded. And at the beginning, I was just kind of doing favors. I was doing like small side things here, but that's just kind of grown to where now I'm working with traders either develop their strategies into full algos or we're doing full, kind of full proper back tests over 5, 10 years of data using whatever source we need to for that strategy. So most of the time, people come with me either with an idea of the strategy or like a full criteria list. So entry, exits, and everything, and then we either turn it into an algo or we do back testing depending on what they're kind of interested in.
And then I guess from the discretionary point of view, have you noticed any like common themes or challenges that maybe those discretionary traders are running into or overlooking?
Um, Do you mean just like primarily if you're just trading discretionary, or if you're trying to get into systematic trading?
Yeah, yeah. I left it. I purposely left it broad because I don't want to like pigeonhole. I'm just curious. Like, obviously, discretionary traders have a lot of like intuitive understanding of the markets and experience. But is there something that like a common theme that discretionary traders who aren't algorithmic often mistake or take for granted, or a specific area that they could improve?
Yeah, sure. I think one that comes to mind straight away, based on recent kind of price action for small caps, is people are insanely recency bias. Like an incredible amount when you're really discretionary. You'll have like a week of losses, or you'll have a bad streak for a week or 2 weeks, and then instantly I see everyone on Twitter go, "Oh, I need to change my strategy. Oh, this isn't working anymore. I gotta change my entry criteria and all that kind of things like that." Where realistically, I've never heard really of a strategy that hasn't lost for 2 weeks at some point, especially if you're in like a very cyclical market such as small caps. You're going to have times where it goes against you, and you're going to have to handle that. That's kind of the whole point of trying to have that strategy. Now, don't get me wrong, it's tough. It's not a fun experience, but that's just something that kind of comes with the game.
That's great insight. And then, in regards to some challenges for algorithmic trading, maybe can you shed some light on some of the challenges that you faced, with algorithmic trading, or some of the misunderstandings that maybe a discretionary person who is looking to get into algorithmic trading might face?
Yeah, sure. I think the first one I touched on a bit before was a lot of people get into systematic trading, including myself, and you'll go down the backtesting route, and you'll start twinkering with all your different parameters, trying to get the best profit curve, trying to get those drawdowns the lowest. Because I think it's really easy to assume in the beginning that if you get that backtest showing really good results, then boom, you're a profitable trader now. You just have to take that live, and you'll keep that performance. And it's very unintuitive to realize that technically, the more you optimize this, the less likely you're actually going to do in profits afterwards. So most of the time, I've kind of taken back, and the backtesting process is still crucial. Don't get me wrong. It's just I don't spend as much time twinkering with those kind of parameters and trying to get the best ones. I'm normally doing a very light optimization, and just kind of taking normally the third top result instead of the first. Things like that, just to help with the overfitting. The annoying thing is that there is no ultimate solution to avoid overfitting. You got to do good robustness testing. You have to have uh, learn from your mistakes of when you've overfitted a strategy, and have some sort of common sense with it. And that kind of comes into the part of being a quantitative trader or trying to get into algorithmic trading. Another one I see quite often, or at least on when people are trying to advertise their algos or something like that, is that it removes all emotion. You're going to have no emotion when running the strategy. It's just it's not true. Yeah, I like to say I think this definitely isn't from me. I've taken this from someone, but it's someone was basically saying that it takes the emotions out of individual trades, but it places them on the strategy. On a day to day basis, you probably won't feel much emotion, but if you still suffer a week of losses, you're going to be thinking that algo doesn't work, and you need to change it, and you need to turn it off, and all those kind of things still come into play. So a lot of it is still emotions. It's just a different degree of them, and at least for me, handling more of a long term amount of emotions compared to an intraday emotion type is way easier for me to handle. So I can, you know, take the time to look over those weeks' performance and be like, is this realistic? Do I need to change it? That's a lot easier for me to process compared to trading discretionally and getting emotional on that one trade that I should have held differently or exited differently. So.
Sure. No, I agree with that. The emotions in discretionary trading, I felt the recency bias. I don't know if you're trading discretionary if you can't, but yeah, it's still one of those things. Like I still, even with my algos, I mean, it's on the strategy, and I've turned them off and turned them on probably when I shouldn't. But anyways, we're all subject to those emotional challenges. Um, in regards to maybe some of the biggest risks, what do you think the biggest risks for algorithmic trading is, and how do you manage it?
Um, yeah, probably the first ones to say are probably code errors or platform errors. That's why I think it is really vital you're picking a reliable platform to kind of run your algos. At least for me, that's why I've liked NinjaTrader. I've never really ever had any issues with them. Most of the time, I'll say actually most issues come during a data source issue. So if you're using Kinetic or another data source in NinjaTrader, or if you're on equities, using like an API, sometimes there can be data issues, there can be discrepancies, and those can cause a lot of weird bugs to happen or weird orders or executions. So having I will say that it's going to happen at some point. I don't think there's like any crucial way you can avoid it. It just comes with the game with being in algorithmic trading. Same with risks come with day trading. It's just a kind of part of the game. But the best ways I've tried to avoid it is making sure you have broker safety measures in place. So making sure you have that max loss, those max amount of entries, max amount of orders, those kind of things to make sure um, at some level your broker is kind of responsible to make sure that those are held in place, and at least that can maybe help mitigate some of the damage. Another one is making sure to use checklists. Make sure you have alerts on your phone. Make sure you know when you're in a position, when you're out of a position, all those kind of things, or when an order is sent. Those can be finicky to set up sometimes, but depending on your platform, all that kind of stuff, you normally can do it. And then lastly, I'd say always use small size. Obviously, small size is relative though. So as you're getting into a bigger account, you can start using more money and the profits can grow. But I've always tried to be a bit more risk averse to some extent, to make sure that if there was this terrible circumstance, I don't lose 100% of my account. Even if I lose 50, that's a lot better outcome than being fully wiped out, if that makes sense.
No, it definitely does. And in regards to the strategy challenges, how do you go about, I guess, understanding both the challenges that it may face, and how do you mitigate that?
I think this is a tough question. This is like the magical question. If you know when to turn off your strategies, then you're in a really good place. For me, at least what I've seen to work is really actually not applying much. A lot of people, the classic advice is to put an MA on your equity curve and turn it off when it goes below and turn it back on when it goes above. The big issue with that one that I at least hopefully I'll help someone with is depending on what EMA length or MA length you choose, you're either going to be way too early or you're going to be way too late. And I don't know if there is that magical MA length that is going to solve all your issues. At least I haven't found it. So most of the time, I use it as a measure to help me understand maybe if I should, lower my risk, lower my size. I think that sometimes can be quite helpful. I try to use more of a longer term MA on my equity curve to kind of help with that. But a part of those things it really comes down to like proving to your psyche that you have a good system and you need to be confident with it. So I try and immerse myself with as much kind of data information as I can. Do as many tests as possible. Make sure you're doing good back testing, spending a good amount of time with it. I think there's some sort of human bias or quote that the more time you spend in something, the more confidence and ability you'll have to withstand with it. Now that can also bite you in the butt. If you spend 100 hours on a strategy that isn't profitable, you're still going to think it's profitable, or you're still going to try and make it profitable. But I try and apply that kind of methodology to make sure I stick to systems. Now I still make mistakes. I probably still have turned off systems when I shouldn't have. It just it's a learning process. I think. I maybe in 5 years I'll have kind of a better answer for that, but at least at the moment I don't think there's any like perfect solution.
Yeah, no, I think you're absolutely right. I don't think there's a perfect solution. I think the solution isn't to do what I did when I first started out. Is I came up with this huge strategy. You think, oh, I'm going to come up with the holy grail, on it got to so complex to at one point that I couldn't follow it. And then what eventually happened is I ended up creating a portfolio of strategies. And I think that when you have multiple strategies, it helps take the focus off of one individual strategy, and you're not like stressed out all the time. So yeah, I was an algo trader and I was stressed out of my mind. But yeah, having multiple strategies, I think, it's also a way to diversify and having that. So no, those are all great ideas. So cool. Okay, then how about did you suffer any big setbacks during your trading journey?
Yeah, I also want to touch on your portfolio mention. Is a really good thing to try and kind of take away from the holy grail of one strategy and kind of use Ray Dalio's mythology of holy grails, uncorrelated strategies. And if you go that route, you're normally going to go the better way of it. And you can also just focus on it takes away that one strategy has to be your 500K a year profit or something. You can choose a lot of small strategies that add up to a good amount of profit and reduce your kind of drawdowns. And that's normally the way I'm trying to go. So obviously only in the moment I only have four strategies, so I'm definitely not the best with it. But as you add more and kind of test more, then that's kind of the way you want to go, and stop taking out a focus of spending so much time on just one strategy as you mentioned. But for a significant setback, I think the one that comes to mind the easiest, I did a tweet about this ages ago. I think it was I lost about 1.7, 1.8K in a day simply just because of a VPS issue. Pretty much what happened was I was trading, my algos were trading on NinjaTrader VPS and it lost connection for a bit. And it was the second, very unlucky, Second is when it was placing orders, it didn't place a stop order, and for some reason it doubled my order. Still don't know really why that happened to this day. And then by the time I checked, I was down 1.7k on the day, and I think at the time my risk was probably about like $700. So that was a crippling loss for me, at least at the time. Obviously, it didn't blow up my account or anything like that, but it was a very shitty day to kind of deal with. Main ways I kind of tried to bounce back from there was I just introduced a lot more safety procedures. I made sure I had alerts on my phone if an order was being placed or being executed. Made sure to have some kind of VPS backups to some extent, so I kind of had like a just a backup server in place just to handle any of those orders. And then really alerts. I think those are really the best ways you can do it. At the time, I think my max loss was about 1.7k, so it pretty much hit it for that day. And that's normally the way you go through it. But I think even I I was talking with another trader recently, and he had a very similar situation. And as we kind of mentioned before, it just kind of comes with the game. Sometimes you're going to get very unlucky. Sometimes you'll be stuck in a hole and you'll have no idea why. And it's the same thing with kind of algorithmic trading.
No, that's absolutely true. I mean, algorithmic trading alleviates some of the challenges, but it introduces a whole host of other ones. Obviously, I'm still biased, and I think algorithmic trading, at least for me, is the way to go. But again, more challenges with the, come become introduced. And then, what advice would you give to someone, starting algorithmic trading? Would you suggest someone just jumps right into it, or do you suggest they start discretionary? What's your thoughts there?
I've given this a decent amount of thought. I think to be good at algorithmic trading, you do need to trade discretionary for some amount of time. I think it's also why someone says like PhDs in algo or at least in trading don't really mix that well. You kind of need some trading experience. A lot of the time, if you're just developing strategies and you have no idea how it feels like to trade those strategies, you're gonna kind of be in for a rude awakening once you set those live. And a lot of things are like even when I started trading, there was a lot of mistakes or ignorance that I didn't even know I had. Sometimes just understanding slippage on different markets and how that can affect it. Different halts and things like that can apply to different markets. So I think to some extent you do need some trading discretionary experience. Doesn't have to be too much, I'd say. Like I think if you probably traded, if we're saying like from ground zero, if you probably traded for 6 months to a year on a sim account or just watching a lot of content, you could probably then start getting into algorithmic trading and start to code based on your coding ability. For more of the coding side of things, or at least algorithmic trading, I would say spend a lot of time experimenting. Don't stay too much on one idea. Stay just a lot on your curiosity of testing a lot of ideas instead of just focusing on one. I'll try and assure you that what one idea is not going to be your holy grail, as we said. You're not going to find that one strategy that's going to make you a millionaire. It's probably going to be a combination of a lot. So you need to spend that time experimenting and see what kind of works. Another piece on that is you don't need to reinvent the wheel. For when I was getting to futures trading, I really thought, I've been successful in small caps. I'm going to be able to find this amazing edge in futures. I don't need to learn from other people, or at least that's some unconscious way of how I was thinking about it. And what I learned quickly was no, I don't have any really good ideas, and I need to start looking at what other people are doing and try and apply it for myself and adapt from there. And I think that's normally the best way to go through it.
No, that's fantastic, and I 100% agree. I think you have to trade discretionary. At least for me, I know it might sound strange, but it's part of my idea generation. And there's certain nuances when you're trading yourself that you don't understand when you're at a higher level. So when people say, "Oh, I'm just 100% algorithmic," if they don't have actual trading experience, I feel like there's a lot lost. And I know you said you still do some discretionary trading, right? Do you feel the same way, like you're still like catching these little nuances when you're trading that way?
Yeah, so I will say my discretionary trading in small caps helped me, I guess, keep on the ball with trading and those kind of nuances. Obviously, it's not trading futures markets. I do look over the futures markets kind of every day and see what happened, see where I thought would be a good trade, kind of just helping my idea generation. It's kind of a whole different topic of why I trade still discretionary, or at least have that portion of discretionary trading in small caps. It's mainly because there are some things, and I think most algorithmic traders will learn this at some point, is that there are nuances which sometimes experience really can beat an algo on. So just for understanding market cycles to some extent, and small caps can be quite a complicated weighing issue. You've got lots of different parameters you can look at. All of them kind of do hold significance to some extent, but based on the day and the time, those can be really different in weighing. Sometimes the news is going to matter way more, and the other times it's going to be because of how much volume it's just had in the morning and the float rotation. Um, so those are the issues that sometimes experience can beat algorithmic trading on. Now, I will say if you don't have that experience, algorithmic trading will always beat it. Thinking in a kind of quantification way is always going to be better than if you're just trying to just trade it discretionary with no experience. But yeah, no, I think you do need to have some sense of a pulse on the market to be able to create good systems most of the time. Unless you're going, full arbitrage route, then sometimes you can. I've seen some people do some crazy arbitrages in like the Indian markets and things like that. Unless you're going that route, then maybe it can work. But most of the time, you do want some kind of discretionary experience.
Sure. No, that's great. Are you familiar with Christian Kalamagi by any chance?
Yeah, I am. I've liked a lot of his content. Never looked into it too much because I'm not so much of a swing trader, but a lot of his content seems very good.
Yeah, and the reason why I'm bringing him up is I do watch his stream occasionally, and he mentioned that multiple people have contacted him to create his system in an algo, and he just says, no, you just can't do it, right? Just because there's the market cycles in psychology, and maybe we'll bring that in the next question. Neural networks will eventually be able to kind of get there, but at this point, he says, there's just a lot that humans can do that algorithms cannot yet.
I'll say with that, it's a bit of a I've heard from a lot of traders that, oh no, my system can't be quantified, it can't be turned into an algo, there's no way. And what I've normally found is your main part of your strategy normally can be. A lot of the time, I've rarely found a circumstance where you can't turn the basic edge of what you're trying to exploit into an algo. And sometimes that can be really useful. Like some of my most like common kind of, I guess, clients or traders that come to me for turning stuff into algos are, trying to take a step back from the screens or having kids or things like that, where in a time of your life, it really can make sense to maybe sacrifice some of those profits to be able to run it in an algo and be able to take time away and kind of relax a bit, at least from trading. But obviously, if you're in your kind of like peak moment of where you want to make the most amount of gains, sometimes, yeah, like the human experience can beat it.
I agree. I think that most things can be quantified. And then what that brings us to the next question is where do you see algorithmic trading and AI going? Do you feel like, some of those discretionary parts are going to be able to be eliminated with neural networks and things like that?
I think this is such an interesting question. I gave it some time to kind of think about, and my kind of conclusion, at least from my stance, obviously I don't know that much to be honest, is I don't think much will really change. I think a lot of the things that have already been available to hedge funds and things like that have been available for ages. It's just kind of coming to the public markets, I guess, such as like AI and being able to use it on lower performance computers and things like that. I can't really imagine a world where there's like no inefficiencies or no edge. I know that's some argument people have made based on, if algos get more into it, but there's also already hundreds of algos being run every single day, and there's a lot of inefficiencies you can take advantage of. So realistically, I don't see much changing. I think maybe people will, if anything, I even saw a service recently that was using AI to create strategies. And to be honest, when I look at that on first impressions, obviously I don't know much about the company, is I'm just thinking overfitting. There's no way you're going to be able to just crank out strategies with AI every single day for every single user that are going to be working. There's just no way. I've tried machine learning for a decent amount. I'm definitely no huge expert or anything like that, but it is incredibly easy to overfit. And if you don't want to take my word, you can listen to people like Ernest Chan. He's incredibly smart with machine learning and things like that. And even he says the main issues is you're probably going to overfit. He doesn't even use machine learning for data mining or things like that. He uses it for risk aversion and portfolio optimization, which I think is a way better use case compared to trying to data mine through historical data. I just don't think it's really a great route for it, at least.
Yeah, it's funny you mentioned that. I had neural networks trying to create these strategies. I had like reinforcement learning. It did nothing but overfit. I mean, I still wanted to try it, you know what I mean? But yeah, I totally agree with you. The only use case, at least at this point, and again, I'm not an expert in neural networks and machine learning, but was to actually have a strategy overlay and essentially act as a regime, filter, essentially. Couldn't do it with the actual strategy. So totally agree. And there's always going to be inefficiencies because if you think about, earnings like announcements, things like that. I mean, there's they're always going to exist, and whoever even at that point executes more quickly is going to still be able to capture it, right? There's just, I guess, I feel like the entire world that we're in, I mean, there's always going to be these types of inefficiencies because we don't understand what the consumer is doing uh, immediately. I mean, maybe with blockchain and stuff like that, that might be another situation. But you said you're thinking about getting into crypto too, right? Potentially.
Maybe potentially. I've considered it. Obviously, there's big advantages to crypto. It's a lot easier on a data perspective. Running algos on it is really easy. At least on like a coding standpoint and things like that. A lot of accessible tools. Main thing that turns me away from crypto at the moment, as we mentioned, kind of commissions. I'm not a fan of paying a huge amount of commissions. It can really hurt your EV. Basically, every trade you're entering is an automatic loss if your commissions are super high. So that makes it more difficult, at least in my opinion. There are some really good kind of arbitrage things I've seen people kind of exploit. I just think if I was to move to crypto, it's a lot of effort, it's a lot of energy, a lot of new stuff I'd have to learn. Where if I probably applied that time to my current systems or futures markets where I'm a bit better, kind of have experience, I could probably do a better result than trying to move all the way to crypto at the moment. That could be my last words, and maybe crypto is going to take us all over. But these are the moment. That's kind of my point of view on it.
Yeah, no, I agree with you on the commission and the slippage. It's pretty challenging to say the least. But with that being said, speaking of markets, where would you suggest a new trader, both discretionary or algorithmic trader, start and why?
That's a tough question. Okay. For Edge, I will say this again. I'm probably gonna, people will come at me for saying that I'm diluting the edge in small caps, but at least on a data perspective, small caps is probably the easiest way if you're gonna go. Now that comes with risks. That's why there's that inefficiencies. There's a lot of risk with small caps, lots of volatility risks. If you're just going for you want to go and deploy systems and you want to try and develop systems, then I'd say probably futures is the better way. Key thing, and I had a couple people ask me this recently, is in futures you're not going to find. I had someone doing like a huge data analysis on NQ data, and I was like, that at least in my opinion, that's not how you're going to find an inefficiency in NQ. Like if you just look at data mining on NQ, most of the time it's quite effective, and you've already got way bigger algos and way bigger institutions going over that data, finding those inefficiencies of those split second decisions of what you can kind of take advantage of. At least from my experience, the best thing has been taking ideas like we mentioned from books, other traders, things like that, and actually testing them. Most of the time you can actually find some stuff that kind of sort of works, and if you find enough of those you can build a pretty good portfolio. It doesn't need to be a crazy edge that you're exploiting. So yeah, if you're going algos, probably futures. If you're going for a really clear edge, then probably small caps. I've never ventured into forex or any of those kind of things, so I can't really speak on that. I think also for swing trading, large caps can be a really good kind of tool. There's a lot of really simple strategies. I think one that comes off the top of my head is like a Christmas strategy. There's a lot of weird inefficiencies like that where in Christmas, I think on average, like it doubles the performance or whatever if you're swing trading most stocks, just because there's normally a Christmas kind of rally. Obviously, not huge sample size, so could be kind of overfit, but at least for the past, like I think 14, 15 years, it's worked quite well. So if you're going for simple edges like that, sometimes large caps and daily bars can be pretty good.
How did you get started? Did you start doing algorithmic trading, in the evening? Like, how did obviously the markets are only open a certain amount of time. So then, what's your thoughts there in regards to, lifestyle and working and having a job and also trading? And maybe you don't have that challenge because you don't have a family or anything like that yet. So you still have a pretty long runway. But, what's your thought process in regards to like timing and trading?
Yeah, I think this is a really important question and quite a big question, at least on it. I will say I have an unfair advantage. I don't have any responsibilities. I have to pay rent, but apart from that, not got a family or any huge issues. I haven't got a 9 to 5. I will say when I started trading, I did have part-time jobs. For a small bit, I had a 9 to 5 job to kind of help build up some capital. Um, I can only speak from other people's experiences here that I've kind of talked to as traders. Some traders, I'll say, you really don't need to leave your job most of the time for trading. There can be a lot of actually good edges that can happen in the afternoons, or sometimes if you even have like a remote job or a bit more of a flexible job, you can even take advantage of those kind of open strategies and things like that. So I'd say if you're starting out, really don't try and risk it all for trading. A lot of the time, it's actually just going to make your trading worse. I will say you'll need to spend a lot of the time with education of some sort, whether that's courses, books, all these kind of different methods you can go down. Um, so I'd say it just takes a lot of time. I like it sounds bad, but I think probably the first 2.5 years, even nowadays, most of the time I'm spending at least 8 hours, 7 hours a day on some sort of trading kind of topic. Whether that's be I'm researching new ideas, doing some data analysis, improving my own systems, trading. All those kind of things really do take a lot of time. And if you can't devote that time, then I'd say try and start small. Just try and start maybe with some string strategies if that works better for you. Dip your toes into some very simple strategies that you can kind of get started with. But at the end of the day, at some point, you're going to have to dedicate a decent amount of time, whether that's staying up later or things like that. At least that's what I've kind of gone about.
No, that's great advice, and I agree. You don't want to just jump full swing into it, right? At least that's my experience. Unfortunately, I did the opposite. I ended up selling my business and said, "Oh, I can do this," and then it's a lot more challenging, and then you have responsibilities too. So anyone that thinks that obviously the market's a great place to be. I mean, and I was investing in trading forever, but beforehand. And maybe someday I'll talk about my story, but it is one of those things where you want to try to keep your income and do things on the side before jumping full into it. So just have to to warn the audience on that. So in regards to learning resources, I know you mentioned some books and things like that. What would you be if someone was starting from scratch and wanted to become an algorithmic trader? Obviously, we talked about learning how to trade a little bit, but what were the key resources or mentors that you had that you would recommend someone potentially look up or follow?
Sure. I think I've put through a couple lists on my Twitter of the kind of best traders I follow. A lot of the time, there's on trading, if you sell a course or anything like that, people instantly jump at it, instantly think you're not profitable. And there's a lot of really good traders that I know sell some good content. And most of the time, even if it is, I have a very weird perspective on this. I know some people won't agree with me on it, but even if it is fake info, but it pushes you in the right direction, or like a fake guru, but it's still decent information and pushes you in the right direction, it can still be really valuable. I've learned some weird things from YouTube videos that were probably a scam YouTube video, but the actual strategy was kind of a cool idea, and I tested it, and some things I kind of took from it. Um, at least for direct ones, I'd probably advocate for Python. I love his content, and I know him quite well now. He's got an amazing Python course for people trying to get into kind of algorithmic trading. Mainly, he focuses on options. I may be wrong on that, but feel free to look through his content. He's got some amazing news articles as well. Um, I think books are a great one. So I already mentioned the kind of the main ones. So Ernest Chan's are really good. Evidence-based technical analysis. Robert Caver's books. Perry J. Kaufman, he's got some great kind of trading system books. Those are really good introductions. If I think if you went through all of those books, you'd probably know as much as I do, at least at the moment. Just because a lot of those have a lot of good core information. And then Twitter, I'd say Twitter is an amazing resource. If you're interested in backtesting, you could check out my backtesting bootcamp. But at the moment, I'm not running it currently for this month. But apart from that, probably go through Twitter. I think there's a lot of amazing resources for some people that I can name drop. The Short Bear, PyQuant. Who else is who else is really good that I like? Probably you just have to explore around, but there are some really good traders you can find. Oh, the One Lance B, S&B Capital. Those are some really good ones you can kind of look into.
Yeah, FinTwit is a wealth of information. I wasn't very active on social media for quite some time, and then, I joined Twitter, and it's crazy. It literally has its own little ecosystem of traders and and sharing a lot of really valuable information. So that's great. Okay, so one last question here. Is there any unique insight or alpha drop? Maybe something critical to your success, or something that you find that's very important in trading that might be less well known?
I will say obviously because I've stolen most of my ideas. Maybe they're not super like secret. But one I'd say is at least for a general advice, you really don't need something that predicts the next trade or something like that. You don't need predictive power over singular trades. You really just need predictive power over a large enough sample of trades. And that's a key thing I try and always remember, especially when I'm going into. I made the mistake last month with thinking I was very close to a 5-figure month, and I was placing a lot of conviction that, hey, I've got a high win rate. These last two trades of the month, they'll probably be profitable. I'll hit $10,000 for the month. It'll be amazing. And what happened was I took two decently sized losses, and I didn't get very close to it. And that's just kind of how that happens. I know over a large enough amount of trades, I'll be profitable, but you really can't put that predictive power onto that singular trade. It will most of the time bite you in the ass, and it's not going to be a fun experience. Another one I'll say is that people really, I think most traders will go against this theory, but some people think there is like a fully efficient market. I think it's like the EIM I or whatever theory. At least from what I've seen, there's a lot of markets that have very clear inefficiencies. Obviously, the clearest one is small caps. There's other ones like earnings. Plays can actually have really big inefficiencies that are quite easy to exploit. And you don't have to go into trading thinking, no, the whole market's efficient. There's no way I'm going to find anything. Edges are actually probably not they're not the easiest thing to come around, but there's a lot of edges. It's actually more harder to find an edge that you can execute well. And even if you're using an algo to execute them, if it's a strategy that goes into really big drawdowns, most people aren't going to survive that. I've rarely seen people be able to fully handle long drawdowns. I remember there was an interview with someone that handled a drawdown for like a couple months. Most people I know, at least for myself, I could not handle being in a drawdown for a couple months. I would probably go crazy. I think I'm doing everything wrong. So there are a lot of edges that you can exploit and use. It just really needs to fit your personality, or you need to have very high kind of mental resilience to be able to handle those drawdowns or those issues with those strategies. And what actually is hard is finding strategies that fit your personality and work well, where you can execute them, consistently execute them, because there is no 97%, 99% win rate strategy that you're never gonna have to take a loss on. Like losing is just a very big part of trading. And sometimes even when you find those high win rate strategies, they're very low sample. So if you're thinking about it in like a systematic way or algo way, am I gonna have that much conviction on a 97% win rate strategy that's only had 18 samples? Probably not. It's not. You could get really lucky with that. There's only 18 samples for me to look at and analyze. So I think those are probably the ones I'd probably recommend the most. Oh, and for like an alpha drop or a variable that you should kind of pay attention to, is time. I think time is such an underrated variable that people don't really look at. Maybe it's because I'm from small caps and time really plays a huge factor into data analysis. But in other markets, time can be a huge one, and the changes between 8:30 and 9:30 and 11, there's going to be really big sentiment changes based off either classical news releases or things like that you can kind of dive into, and those are good things you can check out on your strategy.
So that's fantastic. Perfect. So I think this was a fantastic conversation. How should people get a hold of you?
Yeah, sure. You can look me up on Twitter. It's Goshawk Trades. It has a Goshawk as the bird. It was a bird I was a fan of when I was younger, so I thought I'd use it as the icon. If you're interested in coding services, you can look up Unbiased Trading. That's where I do coding services specifically for traders. I'm just kind of like a software person, basically just for traders. And then if you're interested in backtesting, maybe check out my backtesting bootcamp. Otherwise, I post pretty much almost, I think, 4 threads a week at the moment, on different topics that I'm interested in, what I'm learning with backtesting and things like that you can get for free just on my Twitter.
I appreciate the conversation today. I think it went excellent, and I can't wait to continue chatting with you. And we'll stay in touch. Okay.
Yeah, sure. Thank you so much for having me on, man. It's been a huge pleasure.